Global investors are seeing what others are not seeing with Nigeria's future. But seriously, quote me if I'm wrong here. Nigeria is increasingly capturing the global eyes of outsiders, and for me, that is a glorious thing I have not heard for a long time. So, in this glorious video, I will personally make it my number 1 and number 2 mission to discuss with you on why foreign investors are shipping their hard-earned money into Nigeria for the term global opportunity. Position matters in global investment, and Nigeria's location and market size makes it an attractive regional hub and not just a mere local country that some people see Nigeria as. Viewed as Africa's largest population, Nigeria sits as one of the mighty giants of Africa and West Africa put together. Please, Nigerians, don't come for me if you don't believe you're still the giant of Africa. Anyway, let's continue with the video. Investors see the country not just as a destination for local business, but as a strategic gateway into the continent, which is Africa, of course. Most of this optimism stems from Nigeria's participation in key continental frameworks like the African Continental Free Trade Area, whose purpose is to reduce trade barriers and boost intra-African commerce. Nigeria's corporate and trade ecosystem is now deeply connected to markets spanning over 1.3 billion consumers across Africa. They see a compelling scale that few other African economies can't even dare to offer. All I am saying is that the money such investors we get from Nigeria will be mind-blowing. And again, South Africans, please don't come for me if Nigerians are doing well. Okay? Let's continue. Part of this strategic appeal is evident in where capital is flowing. According to the latest capital importation figures, total investment inflows into Nigeria reached $5.64 billion in Q1 2025, with financial institutions and portfolio investment playing leading roles. Perhaps surprisingly, Federal Capital Territory (FCT), aka Abuja, overtook Lagos as the top destination for foreign capital flows in early 2025, which was able to bring in about $3.4 billion compared to Lagos' $2.54 billion. I like what Abuja is doing because if investors are able to shift their mindset of Lagos is the best option to Abuja is now the best option, then it will change the dynamic for Nigerians by not packing ourselves to Lagos alone but spreading ourselves to other states so that we can have other greater and powerful opportunities. Another thing that comes to my mind is that this regional strength, which is Abuja I am talking about, matters to investors who want scalability, accessibility and connectivity and not just isolated profits in one city like Lagos State. Finally, I can see that people are thinking outside Lagos State, which will also bring profitability. What a mighty relief. Global investors do not put their money into environments they perceive as unpredictable. For Nigeria, recent reforms, especially under President Bola Tinubu since 2023, have constantly aimed to stabilize macroeconomic fundamentals and build a more predictable business climate. One of the most talked about reforms has been the unification of foreign exchange rates, replacing multiple exchange rates with a unified market-determined rate. This move, though initially painful, has restored credibility and transparency, reducing risk of hidden costs and distortion that previously made investors to turn their back on us and run away as fast as they could. Over the past 2 years, inflation has fallen sharply, even though there is still inflation that is flogging the country like crazy. But it has fallen from over 33% to 14.45% by late 2025. And don't be surprised if it rises again because inflation has been living with this country in and out. This change shows that Nigeria's economy is somehow stabilizing, which matters hugely to investors concerned about currency risk and inflation-driven losses. Even local policy shifts are also enhancing investors' protection and market depth in financial markets. For instance, Nigeria's Security and Exchange Commission (SEC) recently raised capital requirements across the security industry, strengthening oversight and resilience for brokers, asset managers, and digital asset platforms. While this might seem technical know-how, it's a confident boost that the business sector is thinking far and wide. It also means that the market are being regulated to global standards, which many international investors insist on before committing their own capital into any business in Nigeria. I like what Nigerians are trying to do because they want to join the big boys in the business sector, and I love it so much. Finally, broader fiscal and business reforms, which include tax policy changes, subsidy removals, and the expansion of digital revenue collection systems put together, is painting a picture of an economy that is becoming easier to do business in, with clearer rules and lower hidden costs. Even though it is painting a clearer picture for them, the removal of fuel subsidy is disturbing Nigerians badly. If you know, then you know what I am talking about. But at least they are trying. One of the most tangible reasons global investors are funneling money into Nigeria is that the opportunity is no longer tied to oil alone. In past decades, Nigeria's investment story was synonymous with crude oil alone. Today it is multi-sectoral, and there are three in particular I want to ship myself into in this video. The first one is telecommunications and digital infrastructure. Nigeria's telecom sector is booming. This is beyond traditional voice services, data usage, fintech integration, and mobile money that has grown massively. Global satellite and broadband companies like Amazon Project Kubia and others have won permits to operate in Nigeria. This is to show that investors' confidence in technology expansion and digital demand in Nigeria is truly working. We even have our own people who are thinking far and wide, like PiggyVest, Opay, Palmpay, Kuda, Cartonic, and many other CEOs who are planting more and more businesses in their own country, which is Nigeria I'm talking about. They are changing and shifting what many foreigners think of business in Nigeria. Some flaws are still there, but you can tell that a lot of things have changed. The second one is manufacturing, fintech, and energy. Nigeria is now attracting capital in sectors with direct economic impact. In early 2026, the federal government reported that policy reforms have drawn about $5 billion in manufacturing, fintech, and energy investment. The quickening pace of investment in energy, especially in renewable and climate finance, is now what we have to look into. Funny enough, my wonderfully made Nigeria launched a $2 billion National Climate Change Fund to support sustainable infrastructure and energy projects. These initiatives are aligned with global investor interest in climate-related assets. That means global investors who are interested in climate change, they like such things, and this launch is also a good thing. The last but not the least is the financial market. Nigeria's stock market has attracted renewed foreign participation. While portfolio investment often viewed as a short-term capital, it dominates some inflows. The growing engagement by international investors demonstrates that Nigeria's market are becoming more important in global investment, particularly where they know that if they put at least their chicken change in Nigeria, it will yield an increase to something that is well attractive. In 2026, global money flowing into Nigeria isn't random, it is well and properly calculated. Investors are increasingly seeing Nigeria as a strategic regional hub where reforms are gradually improving economic clarity, sectors are diversified beyond oil, and the young population signals future consumption growth. Though investment inflows can vary quarter to quarter and challenges will still be there, the trend is unmistakable. Investors are thriving with renewed interest and on bigger scales than ever before. Nigeria's story is no longer just potential, it's now about realization that it is measured in billions of dollars, global partnerships, and a new economic horizons.